What's up, you guys? It's Graham here, and I hate to say it, but if you're not prepared, these next few months are either going to make or cost you a lot of money. For instance, not only do we have an ongoing government shutdown, global turmoil, and a $37 trillion financial reset, but after months of nonstop profits, we have just witnessed the worst single-day stock market point drop since April's sell-off, and the largest one-day cryptocurrency liquidation ever in history, all because of one word that sends chills down every investor's spine: China. That's right, despite the news today that everything is fine, rest assured there's a lot more going on behind the scenes than most people realize. So during a time when stocks have grown to some of the most expensive valuations ever on record, let's discuss exactly what's happening, what this means for you, the impact this is about to have on pretty much everything, and then finally, how you could use this information to come out ahead. Because I'm not gonna lie, this might be a very difficult next few months, and the more you understand about what to expect and how to profit from it, the better. Although before we start, as usual, if you appreciate the last minute breaking news videos like this, it would mean the world to me if you hit the like button or subscribe if you haven't done that already. Yes, I do get tired asking for it, but it does help out tremendously, and as a thank you for doing that, here's a picture of a goldfish. So thanks so much, and also a big thank you to Cook Unity for sponsoring this video, but more on that later. Alright, so in terms of where to start, let's talk about China. As I'm sure you're aware, our relationship with China is a bit complicated because we rely on China for low-priced goods, way cheaper than we can manufacture here, and China relies on us buying those goods to keep their economy afloat. But there's a huge problem. We have what's called a trade deficit with China, meaning we buy much more from them than they buy from us. And that imbalance is seen by many as a structural risk to American manufacturing, economic strength, and national security. That's why earlier in the year, Trump enacted global tariffs in an effort to bring manufacturing back to the United States. But in response to this, China retaliated with their own tariffs. We responded by issuing even higher tariffs against China. And before you knew it, we had one of the worst and most severe stock market drops since the Great Depression. Now, thankfully, a temporary agreement was reached, the market soared back to new all-time highs, and many people believed the trade issues were behind us. Until recently. On Thursday, October 9th, China announced that they would be implementing export controls on rare earth minerals, which are commonly used throughout almost everything that we use on a daily basis. And wouldn't you know it, 90% of those rare earth minerals are all processed in China. Now, in terms of why they would suddenly restrict access to these elements, China's ministry says that rare earth-related items have dual-use properties for both civilian and military applications. Implementing export controls on them is an international practice. Although let's be real, this is likely a negotiation tactic after escalating tariff tensions back in April. It's a chess move designed to weaken us, after we tried to weaken them, after they tried to weaken us, after we tried to weaken them. So in response to them weakening us, for weakening them, for weakening us, on Friday, Trump announced an additional 100% tariff along with new export controls on any and all critical software, going into effect November 1st. But it doesn't stop there. Over the weekend, in response to the tariff, China said, "No, wait, this is all just a big misunderstanding." Trump replied with, "China's president just had a bad moment. Everything will be fine." And now the markets are up like this never even happened, even though Trump tweeted 100% tariffs are still the plan for November 1st. That's why at this point, it's very clear that all it takes is one tweet to destroy the global economy. And as a result of all the drama, we saw a pretty bad stock market sell-off. Now, when it comes to the stock market, first of all, it's important to mention that up until now, we have seen one of the strongest 6-month rallies ever in history. And from my perspective, the market was going up so much to the point where investors were starting to get nervous about whether or not these types of gains were sustainable. For example, I've said this before, but last week, search volume for AI bubble had just broken a new record. Investors believed that the economy was on borrowed time. And the billionaire Paul Tudor Jones said that this is reminiscent of exactly what happened right before the 2001 dot-com crash. On top of that, while all of this was going on, credit scores were dropping at the fastest pace since the Great Recession. Private credit was drying up. And even anecdotally, I've started seeing a lot of investors pulling back on their investments, keeping some cash on the sidelines, and piling up some dry powder just in the event we see a market sell-off. Even for myself, I do my best to dollar cost average into the markets on a regular basis, and it's been harder and harder for me to justify some of these recent valuations. Like, just consider that tech now makes up more of the S&P 500 than the peak of the 2001 dot-com bubble. The top 10 companies now make up more than 40% of the entire index, and the Buffett indicator just recently hit its highest level ever recorded, implying that this is one of the most expensive stock markets according to his data. I say all of this because, from my perspective, no charts, no data, just my own observation, the stock market appeared to be operating on borrowed time, just waiting for a reason to begin selling off. And this was the catalyst that caused people to hit the eject button, especially when we hadn't seen a 2% decline in more than 6 months. Although in terms of what got hit the hardest, we gotta talk about cryptocurrency. Believe it or not, in less than 30 minutes, we saw the largest single-day liquidation in history. Bitcoin saw its first ever $20,000 red candlestick, and leverage traders lost their entire fortune almost instantly. Why? Well, besides the obvious reasons of pure panic selling and alleged large-scale price manipulation to create a generational buying opportunity for those that knew what was going to happen before it happened, a little-known secret behind a lot of cryptocurrency is a term called leverage. In this case, some platforms were offering as much as 100x leverage to maximize returns, meaning you would put down $1 and be able to control or profit from $100 worth of the underlying investment. Or to put this more simply, if you invest $1 and your investment moves by 1% up, you've just doubled your money. But if it moves down by 1%, you're completely wiped out. I think you get where I'm going with this. In terms of why the markets fell so fast and so severe, it's speculated that a large part of the market at the top was propped up by leveraged trades. So when the markets fell, they got liquidated. They were forced to sell, causing the price to fall even further, forcing even more liquidations, causing the markets to fall even further. And pretty soon, a lot of people were wiped out completely. Now, thankfully, despite all of this occurring within about an hour, Bitcoin is still trading at the same level that it was a month ago. Same with the stock market. We've only really lost about a month's worth of gains. And yeah, even though 30 days worth of profit disappearing in an hour is pretty severe, not all hope is lost, because there is an opportunity to profit massively from what's about to happen. And this is something you're not going to want to miss. Although before we go into that, I get it. Watching a month's worth of gains disappear in an hour is tough. Honestly, moments like this remind me that when everything gets chaotic, we shift all of our focus to money and the markets, while forgetting that we make our best decisions when we're level-headed, focused, and take care of ourselves. Like, let's face it, once your routine falls apart, everything else follows. You start skipping meals, eating unhealthy, feeling drained, and making bad financial decisions. Not because the market moved, but because you weren't feeling your best. That's why removing just one piece of daily stress can make a huge difference, especially now. And that's also why I rely all the time on today's sponsor, CookUnity. For those unaware, CookUnity delivers restaurant-quality, pre-packaged meals delivered straight to your door for an amazing price. I've been able to eat and try foods like this incredible grilled Asian hanger steak made by Chef Stacy Barang and this Peruvian flat iron steak made by Chef Nelson Brizuela. All of this tastes like I'm eating food cooked from a high-end restaurant for a fraction of the price. Like, when I broke down the cost of eating each meal, it was cheaper than what I was spending at Chipotle for way higher quality. And I'm not even exaggerating. I have no idea how they stay in business, but I'm not questioning it because I really enjoy their food. Plus, there's no grocery shopping, no meal prep, no cleanup, no dishes. Just heat it up and it's ready in minutes. Not to mention, their flexibility is amazing. You could choose between 4 to 16 meals a week, pause or cancel at any time, and you could personalize everything. I typically go and order the high-protein meals under 600 calories, but there's truly something for everyone, no matter what you like. So if you want to save time, save money, cut food waste, and get back into a routine by eating healthy, I would highly recommend CookUnity. Just visit cookunity.com/Graham and use the code GRAHAM50 at checkout to get 50% off of your first order. Again, I have no idea how they actually make money on that type of discount, but I'm not questioning it. So the link is down below. Thank you so much, and now let's get back to the video. All right, now in terms of my own thoughts about what you could do over these next few weeks or months, here's my entire philosophy. First, it's important to recognize that there's always going to be a reason not to invest or to be pessimistic about the future. Like, when I first started buying real estate in 2011, the overall market had already fallen by about 50%, and people were telling me it was a really bad time to buy a house because there was shadow inventory that was going to hit the market and prices were going to fall even further. Thankfully, I never listened to them, and now those properties are worth about 4 times more than what I paid. The same applies back in 2017 when I was talking about investing in the S&P 500. There were plenty of articles that said, at that time, it was overvalued and due for a crash. but now I'm up about 3 times from where I invested back then. The same thing also happened when I was investing in 2020 and showing I was dumping a lot of money into the markets when things were down. In 2022, when I kept dollar cost averaging. In April of 2025, when I mentioned that this is a good buying opportunity, I'm going in even further, and I'm sure the same is going to be said about the next drop as well. The second, investing is not a game. I hate to say it, but investing is boring. It shouldn't be a lot of fun. And even though I have a great time investing, that's not normal. It's not something that should be exciting, where you're posting screenshots of how much money you've made this week on Twitter. That's not normal. At a certain point, you have to remember that if you're trying to beat the market, you're taking a risk that you could lose just as much as you gain. And unfortunately, I just think the line has gotten way too blurred between investing and taking calculated risk and gambling. Now, third, overconfidence will destroy your portfolio. Instead, it's really important to recognize that the less you know, the better you will often do, because you're not going to overcomplicate things. For example, study after study shows that the best investors simply buy a broad index fund and they hold it for 20 years. It's literally it. And very few people do it because it's boring and they would much rather try to do something else instead that could make them way more money. But trust me, over decades, most people who take the unnecessary risk will look back and just wish they had kept it boring and simple. Fourth, let's face it, an actual market drop is probably going to be a lot worse than you expect. Like, you know when you see a decline of 1% and you buy in thinking you're getting a great deal, and then it drops even further, so you buy in even more, and then it drops even further until pretty soon you're out of cash, and then it keeps falling even more? Well, generally, the market bottom takes place at absolute investor capitulation, where they think the market is doomed forever and it's never coming back. And usually that's also the best time to buy. Like, keep in mind, this was the case back in April of 2025, 2022, 2020, 2008, and even 2001. Even though I was too young to remember that one, but I'm sure it was similar. Anyway, every investor is going to have their own "this time is different" moment, where you question whether or not it's actually a good idea to stay invested. But usually, the longer you hang on, the better the outcome is going to be long term, and you got to be prepared for that. Plus, what we've seen so far is barely a drop in the bucket compared with actual market drops, so this is nothing to be worried about. Next, fifth, good financial habits should be practiced in both up and down markets. Even though it's certainly not the cool thing to prioritize diligent savings, boring investing, and living below your means, in times like this, that will save you 10 times over. And that's why I've always prioritized conservative investing and frugality, because nothing will last forever. I guess I've just seen too many careers come and go, too many businesses get wiped out, and too many investors go belly up to think that that can't happen to me. And as a result, I tend to be pretty cautious about what I do. Sure, that might not always be the most optimal, and I've certainly made my fair share of mistakes. But it does help me sleep at night knowing that even if the market were to drop, everything will be okay. Not to mention, it was found that half of the S&P 500's strongest days in the last 20 years occurred during a bear market, and another 34% of the market's best days took place in the first 2 months of a bull market, before it was clear a bull market had begun. This is so important because if you had just missed out on the top 10 best trading days over the last 5 years, your return drops from 15% to 3.75%. Especially when the best days often come right after the worst, as we've seen this year. That's why, in terms of my own thoughts, I tend to think the data is pretty telling. Like, since 1920, the S&P 500 has seen an average of 5% drops every single year. And that means what we've seen so far is barely even scratching the surface. In fact, since the 1940s, we've seen almost 50 stock market corrections of at least 10%, which works out to 1 every 20 months or so. Separate from that, it's also important to mention that every time you look at average stock market returns, you rarely ever get the average. And usually it's more common that you either make or lose a ton of money in a given year. For instance, a Wealth of Common Sense blog points out that the market has only returned between 8 and 12% a year 5 times since 1926. That's it. Or basically seeing an 8 to 12% return is just as likely to happen as the market going up by 40%. Or even more absurd is that only 12% of market returns have been between 5 and 15% in any given year, and it's more common to see double-digit gains or losses in a single year than return close to the long-term average. That's why it's suggested that when you're investing, it's best to have a time frame of decades and not weeks, months, or even years. And if you're investing, you better get accustomed to seeing a lot of losses along the way. Now, in terms of what's happening today, to me, it's just white noise. Like, even though I really enjoy making these videos and understanding what's going on in the market and why things are causing the things that they're causing, it's not impacting how I'm investing my money. And even though, admittedly, I do have some concerns about the recent stock market valuations and things just being high, it's not impacting my investment philosophy. And you know the saying, the stock market can remain irrational longer than you could remain solvent? That's exactly it here. The market could continue moving a lot higher before it eventually falls back down, and I'm not there to try to time it. Not to mention, we're still not even halfway through what would be considered an average bear market. And even today, the market just needed to digest some of the information before moving on. I also really enjoyed this tweet from the Kobasi letter, which broke down Trump's negotiation strategy perfectly. Make cryptic posts, announce a large tariff near the weekend, money begins pouring in to buy the dip. Over the weekend, the situation de-escalates, Trump then announces a solution is in the works, and within a few days we're completely recovered. Rinse and repeat. Or if you want something that's a little more intense, there's also the $37 trillion debt reset plan to slowly erase the national debt with gold and cryptocurrency. So basically, anything could happen at any time with no warning whatsoever. That's why I'm just staying the course. I'm keeping a little extra cash on the sidelines just in case we see a drop and there's a good buying opportunity that comes up. And I'm hitting the like button, subscribing, and about to eat Cook Unity because I got some meals right now in the refrigerator. I'm really looking forward to it, and I highly recommend them. Again, their link is down below in the description. They're delicious. Like, I'm looking forward to going and eating them right now, so try them out. The deal is too good to pass up. Thank you so much, and until next time.